Are the dividend-paying stocks something that are becoming more important to you in this low interest rate environment? Is that a key element to your stock picking choices?
As a third way of looking at it, dividend by its own is for us not an investment case. The dividend has to be owned by the company. So we start with the free cash flow. Warren Buffett has a very easy explanation what an equity is. He always argues it's a bond where you have to calculate the coupon by yourself. Mm-hmm. And we try to calculate the coupon of each and every equity in our process. We distinguish the equities into different risk classes. Coca-Cola, for example, is risk class number 1. A company like Coca-Cola has a business model which is very easy to forecast in terms of future earnings. The volatility of the earnings of a Coca-Cola or a Nestle is extremely low. For such a company, of course, we request much lower free cash flow yield than for a cyclical company and company in the engineering sector where the request for free cash flow is 3 or 4 percentage points higher. Mm-hmm. But by that, of course, sooner or later, we also have the potential dividend payout. A company like Deutsche Telekom has a very high dividend payout, but the free cash flow is not enough to make this payout ratio sustainable for the future. Mm-hmm. So Deutsche Telekom as a company we don't like, even showing a very high dividend rate.
Interesting. Let's look here in Europe, the euro, and specifically I wanted to ask you about the new fund that they're putting together to continue the bailouts and take the sovereign debt off the balance sheet of the ECB. There's still, Germany now has passed the legislation approving that. There's still several countries that have to approve it, and all of the countries in the Eurozone have to approve it before it's adopted. So it probably will be, I would guess, adopted maybe in the first quarter of 2012 or December of this year, based on the votes that are still remaining. The question, though, is that even if it is adopted, is it big enough, and is it really going to save the euro?
First of all, we have to define which rescue measure you are speaking about. What was agreed upon in the Deutsche Bundestag was the ESFS. This is not the permanent rescue measure. Mm-hmm. The permanent rescue measure, the ESM, will be voted about in December or January. I think we will get finally all the votes for the ESFS. This is the rescue measure which will stop end of 2013.
Yeah, that's the one I was referring to.
This is not a permanent one. What the politicians are right now debating about is the permanent one, the ESM. And that's the more tricky one. And we find more and more politicians who are absolutely not happy about this structure. Some of them feel not happy about the idea of building such a rescue measure. Others argue the legal structure of this ESM is highly difficult and is not done in a proper way that an independent country and the parliament of such an independent country can vote about it. But in general, this 440 billion euros, that's the rescue amount the ESFS will have available, is enough to rescue Greece, Ireland and Portugal, but obviously is not enough to rescue countries like Spain and Italy.
Yeah. Spain and Italy are going to need rescuing in your view?
There are some kind of risk, without any doubt. Spain, it's dependent on the situation of the real estate market. It's less the situation of the big banks. They are decently capitalized, but the savings bank structure looks very vulnerable, and that could be the breaking point for Spain. In Italy, it's just a question whether they will reinstall their business model. Independent families being innovative in design and production. If they are able to do so, then they can survive. We are always focusing on the interest rate they have to pay. The death zone, in our view, is reached if Italy has to pay 7% for its long-term bonds.